everybody, and welcome to the Friday edition of the Liz and Ryan Show. I am honored to have you here. Number one, I can't believe I get to sit in Tom's seat. Don't tell him I'm here. You know what? Have you ever seen you probably haven't. You're too young. Have you ever seen the movie Working Girl?
No, I haven't.
This is how I'm going to do the whole show.
Hey, that works. Thanks for having me.
Sitting at the big girl desk. No, I'm excited. This is awesome.
Yeah.
So this is our first crypto show. We've talked, kind of off air about crypto a lot. And I'm the kind of person, I'm old. I need to hear it at least 10 times before it sinks in. So I'm glad you're here.
I'm happy to fill you in. We can go wherever you want, whether it's just the basics of Bitcoin or kind of get into the details with Ethereum, on-chain, wherever you want to go.
I got a lot of questions. I have them all written down. Okay, real quick, if we can, I just want to do some maintenance for the Liz and Jny Show. If we can we pop into the platform? So here, it is a Friday. I've been keeping an eye on the account. I did do a couple things. We got assigned and Chewy on a calendar. So I closed out of that just to get the capital back. IBIT, which we're going to talk about, it is a Bitcoin ETF. I wound up closing that because it was only at 7 days and we had 60%. And SoFi. All this stuff is going to be pushed. It is pushed out, I believe. So if there's anything else that happens in the account, I'll push it out. 9 times out of 10 on this show, we do it live. But today, I'm not going to do it live because I want to talk about everything there is to know about tastycrypto. So that's it. It'll all be pushed out. It's a big market day. SPOO's up 88. That's the highest I've seen them. So they're on their highs. But as any day that ends in Y, it could all turn around at any time.
It could. Catching a bounce here today. What do you make of the recent price action?
I'm glad volatility is back. So it's been a little bit of a gift. Oh, that's me. Let me turn my ringer off. It's been a little bit of a gift to have the volatility back, but it's been pretty interesting to watch. And I also think that this type of market, kind of going to give you a little bit into crypto. We were talking before the show. I've got, 18-year-old kids surrounding around me, and they're gunslingers, and they think everything they can't do any wrong. They also like this because they think it's super easy to scalp when you get two-way action on a daily basis.
Absolutely. Yeah, well, I can see the allure of crypto, whether it's Bitcoin or other tokens, just given how volatile they are any day of the week.
Yep. Yeah. So that's with this kind of stuff, they like the two-way action. I know a lot of them are scalping futures. They think it's fun because they're like, oh no, if it's on the high, it's always going to go down in the day. I was like, you guys have been doing this for a week. Let's pump the brakes here. It's not always going to be like that.
So where did they start in terms of what they're trading? Is it just the S&P futures?
They're trading
oil.
No,
what's the preference?
It's straight up S&P futures.
Okay.
Yes, so they're kind of in the minis right now. But every young person that I know gets lured into the markets with crypto.
Yeah, it's a good place to start. And then eventually you find natural gas.
It's true. That is true. So you've got some new exciting things. Didn't we get a lot of cryptos recently?
Yeah, recently we've had quite a few updates to the platform.
I can go. We can stay in here if we want to. I'll go to the cryptos here. Now, I know I just texted this morning telling my son to look at the crypto button on the bottom here.
Yeah.
It's awesome.
The team did a nice job.
Oh, you had a huge hand in it too.
A little bit, but I don't actually write the code. Those guys do, and really proud of what they put together here. We've brought the existing crypto experience, which I think was pretty good, just somewhat fragmented, put it all in one place now. So on the mobile app, tastytrade mobile app for both iOS and Android, you'll see a crypto button that you just referred to. If you don't see that and you want to add it, you can customize that navigation menu at the bottom. But if you add that crypto button, you have everything all in one place. The prices update super fast, so you kind of have the watch list there. You've got the ETFs, you've got the futures.
Didn't you say it's faster than any other crypto exchange?
It's as fast as I've seen.
Perfect.
Maybe there's others out there, but as you would expect with tastytrade, this is built for traders, so you need those real-time updates. You also have the ETFs, you have the futures, so you can reference those prices. And there's a lot more coming as well in the future, but really excited about this first phase of the mobile app update.
Do you know what I was really excited about when I saw it? Because, I'm used to, like I said, I'm an old trader, so I take my computer everywhere with me. I very rarely use the mobile. This goes everywhere with me. If I'm even in the supermarket, I've got it with me. But so what I was fascinated with on the mobile app is when I pushed on it today, it told me actually how much I had in crypto, all of it.
Yes.
Aggregated, because I'm a nibbler. So once we get crypto, I like to buy it so I can see what the price is. So I have, I think, almost almost all of them. And as you keep adding them, I keep adding them in, because then if I make a trade, I know where the price is. So I was kind of taken back when I saw actually how much I had in crypto, which I thought was kind of a good feature.
Yeah, we've got that kind of crypto specific view there. You can still see it as part of your entire portfolio, but on the crypto tab, you can drill down into the individual positions. And as you mentioned, we're going to add more and more product. So we've got another 5 tokens that are coming, hopefully by midweek next week, but in the next week or so.
How many tokens are there?
There's thousands. But in terms of where you have a lot of liquidity and what you'll see on centralized exchanges, whether that's through Zero Hash and Tasty Trade or with Coinbase, where there's certainly a lot more, you're just going to have more of the larger market cap. But when you use the Tasty Crypto app and you go directly on chain, use the decentralized exchange, as we've talked about off air, you can access thousands of tokens as soon as they kind of pop up in that sense.
So, I mean, do you ultimately think, and I guess this is more of an in-depth discussion, but do you ultimately think that these are going to keep coming up, or is it going to kind of funnel down to a few ones are going to win?
I think you're going to continue to see more and more tokens pop up, whether they're meme coins or they're utility tokens, things that are associated with brands, with celebrities. I think this is an interesting way for companies to almost quantify brand equity on their balance sheet. If you think about Disney launching a token or Nike launching a token.
Have either of those two launched a token?
Not yet.
But you think it's coming?
Yeah, and I don't know, what is that worth in dollars, but in terms of how it might be used within their own brand ecosystems, there could be value. When you look at decentralized autonomous organizations or DAOs, tokens are often used as voting mechanisms. So you have a protocol that might be looking to develop a new feature.
Okay, hold on. For the general pop, I'm going to call myself Gen Pop now, because usually I say everybody else is Gen Pop, but in this I am. Say what in the DAO. What did you say that was? DAO?
A DAO is a decentralized autonomous organization.
Okay.
And you can basically think of it as, a lot of people describe it as like a chat room with a bank account, if that makes sense.
Okay.
But I would look at it this way. Let's say, for example, that the development of the Tasty Trade platform was driven solely by the users of the platform. It wasn't centralized in that, well, I'm going to make a decision as to what this should look like or the next feature that should be added. Instead, maybe someone that's part of this community, one of the users, proposes this would be a nice feature to add. If you hold in this world, Tasty token, this governance token, utility token, you have a vote, almost in the same way that if you're
like a shareholder.
Exactly. So very similar to that. But in this case, it's not necessarily around the direction of the company, but it might be the direction of a product or what we should build next. And so it decentralizes it a little bit. And that's what we really mean by decentralization. It's in terms of who's in control. And I think that's a really interesting concept. I think you're going to see more and more companies deploy this in the future. And so to go all the way back to the tokenization, I do think you're going to see an emergence of more and more of these. In terms of investments, though, I think there will probably be, when you look at a lot of the different blockchains that exist, clearly a few winners that have emerged, and you're seeing that already. And it's not that there aren't going to be others that will compete in the space, but there is a first mover advantage. Ethereum is one of the biggest, Solana, et cetera.
Yes. And no, as a lay person doing this, I mean, the names that I know are going to be Bitcoin, Ethereum, Solana, and then coming up out of left field with all of my brother's foil hat friends, XRP.
Okay.
So those, yeah. And I'm inundated with XRP lately.
Yes. Yeah. And I think, that's what we've seen. And it doesn't mean that that's going to be what exists into perpetuity, but it's been true up until this point where you just have a lot of capital that's been concentrated in some of these tokens. There's others emerging, but what's the real use case there versus where most of the users and the activity is today?
Now, are people using them, or are they just trading them? Your big ones, like your Ethereum, your Bitcoin, are they mostly trading vehicles, or are they actually being put to use for something?
Absolutely being used. So I think
in different ways, right? Aren't Bitcoin and Ethereum totally different?
Yes. Yeah. You really have to put Bitcoin into its own category, and the best analogy there is probably a digital gold. It's a scarce digital asset. Really driven on the margin by...
Scarce meaning quantifiable amount.
Yes, yeah. Yes. There's a limited supply.
Like
21 million will only ever exist per the code, per the math. It's likely that a couple million or so are probably lost already. So 19 million or so in certain...
Somewhere in Tom's wallet.
Yes, you probably heard the story of the guy that had his keys on a piece of hardware or a laptop that's now in a landfill in the UK somewhere.
Yes.
Probably $1 billion worth of Bitcoin at current prices has been lost, unfortunately. So you're probably running up against that supply cap.
So there's only
today.
21 million Bitcoins in existence.
That's right, or there only ever will be. Not all of them have been mined yet, but that is the cap. And so that's why you get to this digital gold analogy where, on the margin, this is largely driven by quote unquote money printing, monetary policy, zero interest rates. So in that world where you have currency devaluation, and a lot of times we come at it from the US perspective, being US centric investors, but you look at the hyperinflation of currencies in emerging markets, Bitcoin becomes very attractive then because it's a hedge against that. And it's really, an alternative to this existing system where it's very centralized and monetary authorities.
You're making me feel better about the amount of Bitcoin that I own right now then. Thank you very much.
Yeah, absolutely. So you put Bitcoin in that category. And then Ethereum, I think about as, or people refer to it as a world computer. So this is really a settlement layer for transactions that doesn't rely on centralized databases or centralized companies. You don't rely on Google to manage the cloud storage or Amazon in that case. It's a decentralized computer network. What makes it unique is that you can build applications on top of it that don't require an intermediary.
What's a comparable? Give me, a symmetrical one to Ethereum. Or is anybody else out there doing that, or is Ethereum kind of standalone? Is Bitcoin's kind of standalone?
Solana, and then many, many, many others.
So Solana and Ethereum are.
Yes,
similar.
I would look at them as being comparable. There's an argument that maybe Ethereum is more secure, and then Solana is faster, cheaper. And so you kind of give up some things at this stage. There are some trade-offs, but I would think about in terms of what do they do, what are they used for? Ethereum and Solana being very similar. These are layer ones, monolithic blockchains. There are many others out there. There are solutions to some of the performance issues that we run into, but exactly the same in most cases.
So then you take your XRPs. And I want to know, I jump around a lot, and you'll get to know this with me, but I also want to know how you got so deep in the weeds in this.
I've just been fascinated with this. So my time in finance from probably when I left university was, in 2011, I started on a fixed income trading desk on more of the institutional side and really started to get a feel for kind of the macro approach to markets.
So you were never a Bitcoin miner?
No, I was, unfortunately, I wasn't in it that early.
In my mind, you've got the computers everywhere and you've been mining it.
I wish. No, I first got into crypto or to Bitcoin probably around 2014, 2015.
And at that point, wasn't Bitcoin the only one?
For the most part,
yes.
Yeah. Ethereum had kind of popped up shortly thereafter, and then you had XRP, you had Litecoin, but there really wasn't much going on. This is the early days.
You had those too in 2011?
They've been around, not that far back, but more so about 2016, 2017 or so.
Really?
You saw those start to emerge, and then you really had that massive ICO bubble that occurred 2017 into 18, and then the subsequent collapse. But primarily in Bitcoin and Ethereum at that point, but something where it's like, this is interesting, I'll put $50 into it.
Yeah.
It wasn't something where people were buying.
Do you remember the price back then when you put $50 into it?
Oh, I think it was only a few $100s.
Yeah.
Yeah, you look back on it and, okay, I wish. But
did you keep it? Or did you trade out of it?
Yeah, so I did trade out of it. I got pretty fortunate in terms of my timing. I was able to sell out of it almost towards the top in 2018. And then I started to add some more back. I mean, this is something that went to, if I'm correct at the time, it was maybe 20,000, 22,000, all the way back down to sub 5. Then we get 2020, they spray it down with the money hose.
Yep.
60,000, I think twice, and then all the way back down again. So extremely volatile. But it's been a fun journey for sure.
Okay, so now, we kind of touched on the price rabbit hole. Do you think, you see, if you look at the news, everybody thinks it's either going way, 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 way up. That Bitcoin could be, X amount. What do you think? Like, what are your thoughts on these coins?
Yeah.
Do you trade all of them? And then you can tell me, you can take the reins from this, but I think this is such a fascinating discussion.
Yeah, we have a couple slides probably that we can go to as well to illustrate some of the volatility and kind of how I would think about this asset. In terms of my portfolio allocation, I would say about 90% of it or so is in Bitcoin, Ethereum, and Solana.
Okay.
With most of that then being in Bitcoin, and maybe kind of an even split between Ethereum and Solana, and then a little bit of money that you're going to take some shots with. I mean, the volatilities in some of these things are in excess of 100%. So they can go to zero, or they can obviously double, triple, et cetera. But you have to be aware of that. And I would never advocate that you should put, your entire portfolio into something like Dogecoin. That said, it has actually been the best performing crypto asset, but is
it really?
Yeah. Absolutely, better performer than Bitcoin. At least it was up until recently. I don't know, given the recent downturn here.
You're making me feel better because my account looks very similar. If I take my crypto and say how much I have in there, it's 90% Bitcoin. Then I have Ethereum. Don't have a lot of Solana though.
I think you still have some time. I mean, clearly we've had a massive pullback in Solana recently, and
Ethereum.
There's a typo here. Apologies. I've got an extra 2 in the year to date versus Bitcoin. But yeah, you look at Ethereum on a 3-month basis, down 50%. That's wild.
It's wild.
It makes you question everything. But this is kind of how it trades. I mean, characteristically, this is what we've seen on a historical basis.
And if you've got 100% implied volatility or high implied volatility, that means it could go. That's what volatility means. It's price to move, either up or down.
And we love the upside vol. It feels good. We forget, what that actually means, in percentage terms. But if you have an asset that has an annual return of 150+%, you're going to have years, and it has, where it draws down 70, 80. The drawdowns have been smaller over time, but absolutely you should expect 30% pullbacks.
Now, does Ethereum have a finite number or no?
No, it does not.
So that price could be a little bit more
It
tampered?
could be, but there's some nuance to it. It can go from periods of an inflationary supply dynamic or a deflationary supply dynamic, depending on something that's called a burn mechanism. So it's a function of activity on the chain, and this is where you kind of really get into the weeds.
All right, I'm gonna lock in here, as my son says.
So it can be deflationary or disinflationary in terms of the supply issuance, but it's not comparable to Bitcoin, where there's only going to ever be 21 million. And in addition to that, Bitcoin has something that's called a halving, which means that the rate of supply issuance gets cut in half, and that occurs every 4 years.
I did watch your show on this, the halving.
Yes, and we have some more slides on that as well.
Okay.
That's something that, previously, and people are kind of questioning the validity of this given the, current price dynamics in the cycle. But previously, those halvings have kind of set the 4-year cycle, and you can measure performance as a result. It's been bullish. At least that's the way that it's been interpreted.
And isn't it? It's been a price increase every time it halves because there's going to be less coming out.
Yes,
more rare, if you will.
The rate of inflation of the supply is going down versus where it was.
Whoever came up with this concept? Do you know where it originated?
A person, pseudonym Satoshi Nakamoto. We don't know if that's a person or if it's a group of people. We don't know if it's the government.
Like the Nakamoto Towers or whatever.
There's been a lot of speculation around this. Recent documentaries claiming to know who Satoshi is, but it is unknown. And it's a beautiful mathematical system.
Wow.
And it is something that emerged really from the ashes of the great financial crisis. And this truly is an alternative system versus the existing financial system, where you can see your currency debased based on government actions, not just in the U.S. but globally. So it's internet money.
This is fascinating. I'm going to go watch some documentaries.
It really is cool stuff, and that's kind of what was alluring to me. You look at what are the really big macro trades. And if you can get those right, you're going to do well. I mean, those can be anything from today, AI, previously mobile computing. A lot of what we use and we see or we think about today, it didn't really exist 10 years ago, but you kind of forget about that, right? We're used to mobile payments, for example.
Yeah.
But really, mobile payments weren't all that prevalent prior to 2020, prior to COVID.
They really weren't.
But now it seems like they've been around forever.
Yeah.
And so I think if you can get those big macro trades right, you're going to do okay. And to me, this value layer on the internet, when you just look at Bitcoin, and you look at that in the face of, zero interest rate policy, QE, the Fed buying $100 billion in treasuries every month, not currently, but that's the plan at times. When you look at that and you look at what this is, that trade becomes very, very compelling. And it's a long duration kind of tech trade in that sense.
Yeah.
So I think of it in the same way. I might think about, investing in AI or investing in, the future of the internet or, a technology trade.
Yeah. Even, I mean, I know you kind of alluded to this, but Bitcoin is digital gold. So that's the way that I look at it, like asset gathering. And I had Tony from Mexico on Tuesday of this week, and that's what he says. He teaches his kids, if you have $10 to invest, put 5 in the S&P 500, put 2 in Bitcoin, put 2 in gold, and put 1 in treasuries.
Yeah.
And lather, rinse, repeat. It's asset gathering.
Yeah, I think it's a great asset to have a small amount of in a portfolio because of its asymmetry. Sure, maybe it goes to 0, but allocating 1, 5, 10%, given that upside volatility that you experience, your portfolio is going to benefit from that.
Yeah.
Mathematically, there's no argument against that up to this point.
Yeah.
We'll have drawdowns, but it's been a pretty good performance.
It is pretty fascinating. Where do you think we are at the cycle? You think we're just in its infancy?
Extremely early, yeah.
Extremely early?
Which is, is weird to say because this is something that's been around since around 2009. Everyone is familiar with it.
But access just got easier, I think.
Yes.
I think access, before you'd have to go on some other, now it's here. Like now it's on Tasty. And
Yes.
This makes things the most accessible in the world.
I think you're going to see more and more brokerages offer access to cryptocurrency, whether it's Bitcoin to start with or others. You had the approval and launch of spot Bitcoin ETFs, which makes it very easy for larger institutions and people with investments in their 401ks to buy this back in January. Then you had an Ethereum ETF. But in terms of...
What is the Ethereum ETF?
I think the biggest one is probably BlackRock, which I believe is ETH-A. Let's just
I can look that up later. I didn't mean to put you on the spot either.
No, I think it is ETH-A.
Oh, yeah, there you go.
There's the Grayscale Ethereum Trust, which was converted to an ETF, and then there's...
They don't have options on that like IBIT does.
Others. Not yet.
Yeah,
so I guess, how early are we? Well, there aren't even options on the Ethereum ETF, and there's 2 ETFs. And I'm not advocating for all of these tokens to have ETF wrappers.
So would you argue this is like, because Frank the Great, who runs our YouTube chat, he was around before puts. Do you think that's what I'm saying? So we're right there where there's not even options on these ETFs.
Yeah, I think it's very early stage. The other way that you can probably look at this, and you go back to the gold analogy. So the market cap of Bitcoin is maybe $1 trillion, $1.5 trillion or so, got up to $2 trillion. The estimated market cap of gold is closer to 12 trillion. And I don't think that it's going to necessarily get to 12 trillion. Maybe it does. But if you believe that...
Not overnight, but maybe eventually.
Sure. or even it gets to 5 trillion.
Yeah.
The whole space gets to 10 trillion. I think there is some room to grow in terms of market cap, in terms of global adoption. Most recent figures would put global crypto users somewhere between 500 to 600 million globally. You got 4.4 billion internet users. So I think that you do get to that point where the headlines will say there's 1 billion crypto users, probably closer to the end of this decade. But I think it's relatively early.
Are these cryptos being stuck into management portfolios? Are there a lot of not self-directed portfolios? I'm talking about the mutual funds and things like that.
Yeah, you're starting to see that, and then you're starting to see other ETFs that are making investments in the Bitcoin ETFs in the same way that you would have a portfolio makeup where, let's say I'm a commodity fund and I might have 5 to 10% in a USO or an equivalent commodity ETF. So not only can you have a direct investment in the ETF, Bitcoin ETF itself, you're also seeing those Bitcoin ETFs being included in some of these other funds.
Interesting. Very interesting.
Yeah. So and that's what you also see starts to drive this and become more of the narrative is the flows. And we're clearly seeing large outflows as of recently, but prior to this, that's what was driving a lot of the price.
It seems very correlated with the market, though, too. When you see a big drop, when the market was down, Bitcoin was down. This last couple weeks, I'm not saying I have no.
Yeah, well, we've got a slide. I think it might be the next 2 or 3. So we've got some performance here. We can talk about, there's a way that you can model expected moves based on implied volatilities. There are fairly liquid options markets for crypto outside the U.S. We've really been behind.
Let me ask one quick question, because you're saying implied volatility. Where can I see the implied volatility of Bitcoin and Ethereum?
Unfortunately, you're not going to be able to see it very well in platforms here that are going to just bring in kind of U.S.-based data sources. There are large exchanges outside of the U.S., one being Deribit. So you'll have an implied vol for Bitcoin and Ethereum. You can see that on like a trading view. You can Google it. So that's what I'll use to model some of this.
Okay.
We've got some guys coming on the Tasty Crypto Show on Monday, actually, from Volmex. And that is a volatility, crypto volatility index provider. And you can actually trade perpetual futures on those indices.
And what time will this be aired?
That'll be at 4:30 Central.
On Monday?
Yeah, that'll be on Monday. So excited to talk to these guys. But again, it speaks to just how early this whole space is. So I suppose, you have IBIT liquid options in there for sure. You can see the volatility there.
Yeah, you can see. Anything that's kind of a listed is something that I, as an old school trader, can look at. That's why I was just wondering where we could take it.
Yeah, I think that's a good proxy for this.
Yeah, for sure.
Let me just see what it is. If we look at the quote details. Yeah, so if I'm looking at IBIT and I've got an IV index of 60%, you can see that the volatility that I've pulled in here from Deribit is 55%. So it'll work.
Yeah, close enough.
Absolutely. And
I mean, that's just it. Is everybody's got to realize back in the napkin math is close enough, especially in this.
And even for things that don't have an implied, I'll use a 30-day realized and just annualize that, and you can get a range then. And it gives you some sense of what's realistic when you have things that trade at 100%, 150% vol.
Right. And we know as traders, that's the one thing that we do know. If there's 100% implied volatility, that means it's either going to be zero or it's going to be doubled. That's what that is saying, your implied volatility.
Absolutely.
All right, let's pop back into your slides.
Yeah, so if we go to the next one, just to speak to the correlations, these are some updated correlation matrix here.
Oh, very cool.
So yeah, I put this together this morning, and so what you'll see is, as you mentioned, there is a positive correlation, as you'd expect, with other risk assets, whether that's the S&P or the NASDAQ. And what we see quite often is that the strongest correlation is actually with the Russell and with small cap equities.
Really?
And you'll see too that a lot of the performance that we realize outside of Bitcoin with smaller cap stuff follows economic data, follows environments where ISM and other kind of gauges of the economy are trending higher. Then you have an alt season, then these kind of alternatives to Bitcoin do well. Right now, Bitcoin's market cap is about 60% of the entire crypto market. So it's been Bitcoin over everything.
Yeah.
But certainly a positive correlation over different time frames. Right now, we have a bit of an inverse correlation, very, very short term with the dollar, a little bit of a positive correlation with gold. What I have noticed as well.
But that's very small. That's a very, I guess the 15 days a bigger correlation, but
exactly.
When you're looking at 10 in the yearly correlation with gold, I don't think that's correlated.
And you go out over longer time periods, as you would expect, you're going to see less and less of a correlation. And that's where, when you look at Bitcoin specifically, it is really an uncorrelated portfolio diversifier that previously has realized asymmetric returns. And I think that's really appealing to many investors.
For sure. It's another diversified thing to put in there. I find it so fascinating that it is so tied to the Russell.
Yeah, you do see a little bit of that. And I would also argue that, recently what I've noticed is, we don't have it up here on the screen. I think you could use the VIX as somewhat of a proxy for this. But bond market volatility, as measured by the MOVE index, is something that when bond market volatility increases, and you see this in other areas too, when you think about just treasuries being used as collateral in the system, but that tends to really weigh on crypto as a higher beta risk asset. And so you look at, for example, the fairly strong inverse correlation with treasury bonds.
Yes.
It gets me to my next point. Where or when does this not work? In the environments that we're in right now. We don't experience them all that frequently, but the absolute worst macroeconomic environment for Bitcoin and for long duration assets, the NASDAQ, NVIDIA, Tesla, down 50%, is an environment where both economic growth and inflation are showing signs of slowing down. And what do you see in those environments? Well, obviously people move into treasury bonds and they move out of higher risk assets, right? They move kind of closer in on the risk curve, I suppose. worst environment you could possibly be in for crypto. No surprise that, clearly there's some.
But you're right, that is the same with the stock market as well,
yes.
like the general market ETF.
So that's what's driving things lower here. Volatility has broken out, VIX north of 20. You want to get out of crypto in those environments. And maybe there's some levels that you can pick where you do find a bid. And we've clearly bounced from about mid 70s to almost mid 80s now. But this is all explainable. And it has absolutely nothing to do with, is Bitcoin real? No, Tesla, NVIDIA, the NASDAQ, everything is getting hit because the market's quickly realizing that
it's a flight to safety.
Yeah, we're slowing down a little bit here.
Yeah.
What comes on the other side of that, though, sends you to the moon, and that is the repricing of interest rate cuts. That is ultimately the stoppage of QT and QE. They'll call it something else this time, but it is the money printing, and that's what this is really a hedge to, in the grand scheme of things.
Okay, speaking of the money printing, did you find a huge uptick in you actually said this, the money cannon, when they were throwing it at everyone during COVID, and that's why, and a lot of
people, absolutely, yeah.
I think that really put Bitcoin on the map.
Yes, 100%. And I think that when you see the response from monetary authorities or even on the fiscal side, there's a real reason why you want to own some of this, in the same way that people want physical assets that are going to hold value, that are going to store value, whether that's gold or farmland, timber, whatever it might be, real estate. So you see the same thing, right? What's outperforming here? Fixed income proxies, REITs, utilities, treasury bonds are doing well. Crypto is getting crushed because of the environment we're in. But then you get on the other side of that and you want to own these things that have some element of scarcity to them, whether they're digital or they're physical.
I know we touched on this briefly, but we talked about Bitcoin and Ethereum. And we can follow along your slides too, but we can put a pin in this. I did want to talk about XRP and XLM and how those are different from there.
Yes. So and I'm not.
I don't know why is it everywhere all of a sudden? Like, what's the big catalyst? Like when my cab driver and my brother call me and tell me to buy XRP, and for my son's birthday, my brother gave him money and he's like, you got to put it all into XRP. I mean, it's out of control.
I think the catalyst is clearly the perception that you're going to get a shift in the regulatory environment that's going to invite more institutional participation as a result. And when you look at the XRP ledger as an alternative to the SWIFT system and a way for really institutions, banks, to send currency across borders, this is something that becomes very compelling. That said, there's not a lot of evidence that it's being used for that today.
Okay.
And I know that
this is the realistic tamper that I'm looking for, because
XRP,
I was cornered in my brother's house one day and I was like, I don't know.
The XRP army is going to come after me for this.
They are.
But, there isn't a ton of evidence. And this is true of many.
Is XLM the same as XRP?
I think I honestly am not extremely familiar with XLM.
Okay.
I think that there's some similarities. I know early on developers that were involved with XRP are or were involved with XLM. But yeah, I really can't speak to that. I've got to do a bit more research there. But XRP right now, if you exclude US dollar Tether, which is a stable coin, XRP is the third largest crypto asset by market cap. It has a market cap of 138 billion against Ethereum in second place of 233 billion. Now, there's 60 billion, or there was, of value that was being secured by the Ethereum network. There are real-world use cases, decentralized exchanges that generate billions of dollars in revenue.
So it's being used. Ethereum is actually in use.
100%. I don't think you can say that about XRP. Certainly not in the same way that you can say that about Ethereum. It's entirely possible, but
is XRP meme Bitcoinist? You know how there's like the meme stock? Is that more like a meme where you've got an army of people that are now believers?
There's an army behind it. There's believers behind it, but that's again true of any of these things. That was true of Tesla, and still is, and many others for a long time. There's kind of a cult following, I suppose. Yeah. I just think that it's still maybe too early to tell whether XRP is going to be the winner or whether these banks are going to use this system, right? There is the idea that there will be more DeFi, decentralized finance applications on or that will utilize XRP, will utilize the blockchain and then the ledger. And there's some different there's like nuance to this. There's a couple different components to it. But I think primarily, the narrative, and I'm sure that there will people that'll tell me I'm wrong, but I think primarily the narrative has been that a shift in regulations where you're moving from an environment where it's hard to argue the U.S. government was not anti-crypto previously with the administration to one that is pumping and dumping things currently. If you do get regulatory clarity, it invites institutional participation, and there is a clear use case with this ledger for cross-border payments. It's just that it's trading at a $138 billion valuation right now, and there's not a lot of evidence of it being utilized yet. But it could be coming, and so like with anything else, we have to discount the future.
You are very even-keeled about talking about this. You're like a father who's talking about all of his children equally. I like it.
Oh, well, I mean, I've been in this space for a very long time, and I think what you just have to remember is how volatile it is. And so you are going to see crazy stuff to the upside and crazy stuff to the downside. And it might not make sense on the downside, but it also might not make sense on the upside either.
Yeah, but people can take the upside. It's harder. People don't understand the downside when it's happening.
Yeah, well, here's the other way that I would think about some of this stuff in terms of a technology, right? Okay, if we look at this as a business, well, what is the business of Ethereum? What is the business of this technology, this settlement layer? It's to sell block space. It's a blockchain. Right, there's an associated fee with interacting with the network. There are revenues that you can derive. It's not exactly cash flow in the same way that Apple sells iPhones and they have money that comes in the door. But you can start to model this. And with all of these different blockchains, you look at these market caps and you look at the usage against them, or if you start to apply financial ratios to some of these things, there is an argument that and I want the stuff to go up, don't get me wrong. I'm an investor here. But there is an argument that you have an oversupply of block space. And you will have use cases that catch up to that. And for this to proliferate into the future, you need that. But that's no different than telecommunications networks or oil infrastructure, right? We want lower oil prices, but fracking ultimately resulted in an oversupply and a complete collapse in price going back to 2013. I mean, it was resulting from
your basic economic
OPEC
principles
actions.
Still are applied here.
100%, right?
I never thought about it like that.
I think that's what more and more people will, and it's not true of every single one of these things, but if you just high level think about, okay, if a blockchain's a business, what does it sell? Well, it sells block space. Again, there's a lot of nuance to this, but then you can understand what kind of the economic drivers are going to be when you're going to have oversupply. You can model users. You can get a sense of one versus the other and have a bit more of an apples to apples comparison, even if the technologies are slightly different. So I think that, you're seeing some things here where it's like, okay, Ethereum, $233 billion valuation. Is that fairly valued? Is it expensive? Is it cheap? Well, you want to break that down a little bit like you might look at a company. And I don't know if that's the best way to do it, but it's better than nothing.
And you don't know if that's high or low for itself, right? Because you can't necessarily compare the two of them against each other. It's not like you can say, I mean, you did for how big they are, you can say that, but they're just so different.
In some cases. That said, let's go back to Ethereum versus Solana.
Okay.
Do many of the same things.
Okay.
We can model daily fee revenue. We can model users. We can look at wallet addresses. We can look at what's happening on chain. And then we can look at Solana with a market cap of, let's call it about 70 billion. Versus Ethereum at 233 billion.
And so Ethereum is trading, I just pulled up the prices too, just to keep apples to apples. Ethereum is trading about $1,900.
Yes.
And Solana is trading about $132.
Yes.
Okay.
And so it's not to say that you're going to see the market cap of Solana flip Ethereum or that Solana should be 1,900, 2,000, whatever. It's just that, okay, on a relative basis, if you think about this as a pairs trade, and that's another thing we haven't talked about, but you can absolutely trade these like currencies, or you would trade other assets on a pair basis. But there might be an argument around, maybe Solana plays a little bit of market cap catch up here. So does that put Solana at, 100 billion, 200 billion if ETH is 400 billion? Maybe. It's definitely not $133 per token if that's the case.
Right.
Doesn't mean that that's going to happen, but I think that's another way that you can kind of look at this stuff.
And Solana is very much like Ethereum where there's an unlimited supply as well.
Yes, yeah. Okay. There is a similar dynamic there. And we don't have to get into staking, but both have a proof of stake consensus mechanism. So you can stake the tokens, you can generate rewards as a result.
Okay.
So similar chains.
Now, you keep mentioning the market cap of them. Is there any way to see either on the platform or on this market cap, or is that something that you got to go to Google for?
That's something you probably have to use right now, like a CoinGecko, CoinMarketCap.
Okay.
We have some of that data in the tastycrypto app, which does a lot of things directly on chain and is entirely disconnected from the tastytrade brokerage. But you can see some of the data points there.
So that's different than this. This is the Tasty brokerage, which I can do here, which you guys just did a great job with. Then there's the tastycrypto app.
Tastycrypto app is a self-custody wallet application, but I would think of it more as a crypto platform. You can log into your tastytrade account. You can actually buy crypto in your tastytrade account with the tastycrypto app, just a different interface. But the wallet itself gives you all these on-chain capabilities. You're actually in control of your private key, meaning you can sign transactions. You can do stuff on chain. It's entirely up to you. It's like if
you can can't we send things to each other on tastycrypto? Couldn't I be like, okay, here you go. Here's
absolutely
a Bitcoin.
Absolutely. And if you hold, you can also send crypto to tastytrade if you want to put your crypto at tastytrade or held with wallets that are managed by Zero Hash, the service provider there. You can do that. But these things are separate in the way that I would think about tastytrade as the bank, and then tastycrypto is like a safe at your house. It's a really crude analogy, but they're separate.
So why would you use one over the other? When would you use one over the other?
So I would use tastycrypto if I wanted to access DeFi. I wanted to, as we've talked about previously off air, I wanted to create a liquidity pool on a decentralized exchange. I wanted to trade USDC stablecoin or Ethereum for any one of the thousands of tokens that exist.
Now, this is going to be way above a lot of people's pay grade, but it's fascinating, and we've talked off air about that.
Yeah, we can
actually create liquidity pools, and you've deep dived into this on tastycrypto, haven't you?
We have, and I would love to,
it's all archived, it's all there, yeah.
Come on and walk through that here as well. But that's what it gives you access to. It's a key to a gateway to what I'll call on-chain opportunities, whereas what you're doing in tastytrade is much more like a Coinbase. It's more like a centralized exchange. You've got everything in one place, and that's what I love about it too. Options, stocks, futures, crypto. The whole portfolio can be managed there. But if I want to do the more, I don't know if you'd say advanced, but certainly more.
That's for sure. You could say advanced.
Technically complex stuff, you can do that with the tastycrypto app. That said, what you're seeing and what we're working on as well is it's becoming easier and easier to use. We are abstracting away the technical complexity of kind of how it works today. And so to create these liquidity pools in the future, to stake, to trade on chain, it's going to feel a lot more like the experience that exists that you're used to in tastytrade.
I mean, I love that you're breaking it down little by little, because now, I mean, the fact that they can even kind of interface with each other, so you can transfer coins back and forth between tastycrypto and tastytrade.
Yes.
That to me makes it so much easier when it's there. So you can kind of get my feet wet here and then kind of go over there.
Yeah, I think that's the natural next step for people where, okay, the gateway is Bitcoin. I start to learn about Ethereum.
It is the gateway.
And then, then you learn that you can do things with these assets. They're multifaceted in that, sure, you can invest in an equity and you can receive a dividend. But you can actually use these assets in these kind of faceted ways on chain. It would be like if
that I think that is the no one knows about that kind of stuff yet.
Not many people do. It's growing.
You're probably one of 1,000 people that could articulate the liquidity pools.
Well, you can look at how many wallet addresses have interacted with these DeFi applications, because everything on this blockchain network, I mean, it's just a centralized database. You can think about it as like a spreadsheet in the cloud. So you can see this information, and you can see that there's only been, we'll call it about 10 million or so addresses, at least on Ethereum, that have interacted with these protocols. So extremely early. But let's fast forward to an imaginary world 5-10 years in the future, okay? Right now, what you're starting to see more and more signs of, and the narrative is shifting towards, is the tokenization of securities. On the institutional side, that's happening. BlackRock is behind a lot of this, and where it's happening first is in money market funds, is in fixed income instruments. It's very easy to make credit instruments available and just tokenize them on chain. All makes a lot of sense, available to institutional investors. In the future, I believe that as you have, and it's not going to completely replace this system, it's just that they'll probably work for a while in parallel. But I believe that when you see the tokenization of securities, right, Apple stock is now a token. The US dollar is today one of the biggest real world assets on chain. So dollars trade in tokenized form on chain. You know about liquidity pools. What need for an intermediary is there if we have a system where I can stake my Apple token, my dollar token, provide liquidity to facilitate the exchange of those tokens.
And take in a little bit of money to do it.
And instead of, absolutely not a knock on tastytrade, you just have to be aware of paradigm shifts. But instead of a brokerage or an exchange receiving a fee, the end user that's providing liquidity receives the fee. And that's an entirely different system. But I do think that we have to be aware of paradigm shifts in the same way that you were in the trading pits.
Oh.
Open outcry shifted to the screen. Well, if you think that AI is a real thing, which it absolutely is, and blockchain networks are a real thing, it's really not that hard, in my opinion, to see where this goes next. It's not tomorrow, it's not next year, but it's going to happen a lot faster than people think.
And it might gain some steam, right? It could just take one catalyst to kind of flip.
And I think that catalyst is regulatory shift, because we have been operating in an environment where the two most difficult places for cryptocurrency globally, China, Russia, and the United States. And now that seemingly is going to change. We will see how it changes, but imagine how many large institutions with hundreds of billions in capital have just been sitting on the sideline. Now you're seeing Bank of America and their CEO talking about, we're going to launch a stablecoin. JP Morgan is already participating on chain. This is all coming. It's just, again, not going to happen tomorrow.
And I know your show is one thing, and I also want to give a big shout out to, I'm going to say it wrong, Tasty Crypto Beans?
Beans is the show, but yeah, Tasty Crypto from the team, Shelly and Dan. Doing
I met Shelly the other day in the
job.
lunch line. She's fantastic.
Awesome. Yeah, so Beans is their morning show on Monday and Friday, and they're doing a lot more advanced stuff than I'm familiar with.
Well, and that's great because there's shows for everything. But my question was, I know that's why I gave a shout out to the Tasty Crypto Beans, and then I'm going to be watching a lot more crypto stuff. But where would you tell someone? You actually just did this with Katie, the crypto. Where do I start? Right, the Tasty Trade Crypto. Like, where would you tell someone who wants to start learning about this? Like, I talk about my 18-year-old son all the time and his trading journey and all this stuff because we gave him an account as soon as he turned 18. But where would you put somebody who's got very little knowledge except for the only thing they're armed with is the vocabulary. Bitcoin. He doesn't even know what Ethereum is yet. He just knows crypto, Bitcoin, and XRP because of my brother. Where would you point them to learn this? And is there going to be majors in this?
Yeah, I think so. First and foremost, I would just check out, shameless plug, but I would check out tastycrypto.com. We spent the last couple of years building out our library of resources. We have a couple kind of learn center.
And it's all free.
Yes, yeah, it's all free in there. So we've got tons and tons of articles on a lot of this. This space moves so quickly as a function of a couple different variables, but it's something that some of that content's probably a little outdated in terms of the articles we wrote even just last year.
Right.
But there is a Learn Center that'll give you the basics. I would also offer up, the Block or Decrypt, CoinDesk. There are a lot of different, I guess you would think about them as crypto, digital asset, kind of financial media outlets that have popped up, similar to like a CNBC or a Bloomberg in that sense, where you're going to be able to get a lot of the news that's happening in the industry. Masari is a good research service.
That was one of my questions I wrote. I go, where does our crypto expert get his news from?
Yeah, a lot of those places. Anymore, ChatGPT does a fantastic job of aggregating information on the internet, and then you can just talk to it, obviously. But it's going to pull in information from those sites. But those are kind of the equivalent of your CNBC or Bloomberg, that sort of thing. Not saying that that's where you would go to learn about options trading, obviously. Go to Tasty Trade or Tasty Live. But
that's where you get market news.
If you want to get some news, that sort of thing, just kind of stay on top of it. The other thing that I would offer up is, it kind of sends you down the rabbit hole at times. But the conversations on Twitter or on X, I mean, that's where there's FinTwit, there's Crypto Twitter. That's where it is. And so you want to be there, and more so too.
Is it X or is it Reddit as well? Like, is there a lot of conversation?
A little bit on Reddit, and then even beyond that, and we have a Tasty Crypto Discord where you can interact with us directly. It's like one big chat room. But you're seeing a lot of this now move to these kind of brand-specific, almost siloed off channels or servers on Discord and Telegram. So you're really getting into, the crypto weeds there, but that's where you can find some alpha in a sense.
Are you getting, when you're looking at these things on X and Reddit and in the Discords, I feel like there's a lot of opinions. A lot of opinions.
Many, yes. There's a lot of noise.
There's a lot of noise versus the actual, regulatory news.
Yeah.
Yeah.
I think you want to be, in kind of on the traditional sources for that. But anymore, I mean, you're seeing some of these governing bodies utilize these platforms for the distribution of content and information. The SEC is going to be posting updates on Twitter. It's a new world.
Yeah, that is fascinating. I love it. Well, we love Twitter too, because I think that honestly, with our show, we do a live Twitter segment, and I think a lot of people have gotten, when you can talk to somebody about it, it's kind of hard to learn crypto when you're sitting learning it by yourself. It's great to have you to come in and bounce things off of.
I appreciate that.
We're very lucky because we're all we can come in anytime we want to, and there's groups of people that we can talk to about trading and crypto and anything. It's at our fingertips. But a lot of people just are by themselves with a computer, and it gets a little bit lonely. That's why I do like you said, tastycrypto. They can go and how many people do you think are on there? A lot?
It's growing. Yeah. So there were a lot, and then we just slowed down a little bit over the last year or so, as we kind of shifted the team around. But we are reviving it, and I think there's an active conversation in there. It's someplace too where if you have, let's say, a bug that you found in the app, it's really moving away from email. Because you get this direct response, you can go right in there, you can create a ticket, and we're going to get back to you immediately.
Oh, thank the Lord, I'm done with email.
Yeah,
I always say if anybody wants to get a hold of me, just text me. And I know I'm old, but the emails.
It's a lot like that then. Yeah.
So
we have a Discord channel if anybody wants to check it out.
I love it. Well, you've created a crypto. I'm going to be watching all your stuff now. Okay,
Awesome,
SPOOs are up 100. Do we have any other slides that you wanted to go through?
We've got a lot here.
Okay, we've got 9 minutes.
I guess it just depends on any other topics you want to discuss. So a couple things that I put together here. A little bit of context around volatility and crypto crashes. These big, how do you think about what's the perspective around a 20% move? So just a couple things here that we can sort through.
Crypto crashing. I don't like that headline, but I will listen.
Yeah. So we obviously recently had a pretty big pullback. We had mentioned earlier Ethereum down 50% in 3 months, and Solana maybe down about 40%. But just wanted to look at isolating downside moves here for Bitcoin going back. And I put this research together right around the time that you saw the unwind of the Japanese yen carry trade in the beginning of August, because that was, we had a really big move then. And so just looking back historically, how often do you see these moves, and, what's the magnitude of them? It's pretty common that this happens. And I think that's what's important to understand, because people can get taken out of these trades and then they rip higher 50% off of these lows, and you end up chasing it and you get chopped up a little bit. And so I think you have to have a little bit of patience with an asset that is this volatile. There's trading opportunities. For a lot of people, this is a longer term investment. That is,
I think for most people it's a buy and hold. It's not because you can't short it.
Yeah, you can't short it through the spot market, but you can sell futures against it. There's a basis trade. You can certainly buy puts now, and I think you will see eventually.
In IBIT, you can do like a put zebra. There are ways to actually.
So you can get those that negative delta exposure there. But I just wanted to showcase that the moves that we see are actually quite common. And in many, many bull markets, you should expect, 20 to 30% pullbacks. Those are corrections. Where in equities, your correction might be 10 to 15%, and then 20%, 30% bear market sort of call. I think your corrections, obviously, in something like this that are more volatile are much bigger. And so you can see that, how many times has that happened over the last few years. 23, this whole thing was just dead. We didn't really move at all. And then you started to get a little bit more volatility here. I don't have it on a slide, but what I will...
23, it didn't move at all?
It didn't have these massive, massive pullbacks because you had, the destruction in the marketplace after the FTX collapse in 22. And then we just kind of bottomed out and traded sideways for a good chunk of 23.
What price was Bitcoin trading in 23? Do you remember off the top of your head?
I think off of the lows, we were 15. And then in 23, I can remember just being on the show with Tom and Tony and trying to convince them that this was a real thing. And we probably chopped, month to month between 20, 30. Just didn't really see a ton of volatility until you started to get some signs that, The ETFs are coming, and you saw a little bit of an interest rate dynamic there too.
So just to put it in perspective, so in 2023 was just chopping around between 15 and 20, and
more like 20 to 30. Maybe took a
still
peak
very
at
very
like
low,
40.
and then flash forward to almost a year and a half, 2 years later, it breached like what 110, 111.
Yeah, you go from. And I'm going to be off.
And that's what the implied volatility does. When you've got an implied volatility asset like that, it can multiply.
Yeah, I mean, you went from 30, let's say 30 to 60 in 24. You kind of topped out around 70 some. You trend lower, and then up into the election as soon as it looked like, because Trump stood up there in July and was like, "I'm your crypto guy."
Yeah.
And so as soon as it started to look like he was going to win, and then he did. I mean, this thing just blasted off, and so then you flirt with 110. You're up at 108 or whatever. A lot of those catalysts come and go, and I've written about this, where this obviously is something that needs these constant catalysts and this constant hype cycle. But those have come to pass, and we'll see. I think there's many catalysts on the horizon, but people have a very short-term kind of outlook and attention span here, so we've pulled back. But yeah, I mean, we're upset that we're down. It's 85.
It's 85. That's what I'm saying. When I looked at that, you were saying it was between 20 and 30, even if it's 35 or 40.
Off.
Yes.
Yeah. So it's good perspective to have there, Liz, for sure. I mean, yeah, if you were in this a year ago, you're pretty happy it's 84. 2 years ago, you're excited.
Yeah, and it's not a T-bill, right? It's not just going to go up like this. It's not doing the cliffhanger, because there is volatility, and you should see these ups and downs.
Exactly. Yeah, and I want to.
It hurts though.
Anymore. I've got some stuff on the halving. Okay, one thing that I think is kind of fun.
Okay.
Everybody gets excited about this at times. If we go to the slide that is, if the halving bullish, and again, this is just for fun. It probably looks stupid now with the price at 80,000.
When's the next halving?
So the most recent halving occurred in April of 2024.
Okay.
So we're not quite 1 year in. What we've seen, if we model prior cycles, is that it tends to top out on average, we'll say about 500, 550 days or so.
So we're almost there.
Almost there. Not quite a year in. So there is time, I think. Now, we don't have much data to go off of. We only have a few prior halving cycles.
True.
So whether this happens again or not, we shall see. But I just want to put a little bit of perspective around this. And this is just, it's wild when you look at it like this.
Whoa. So I'm looking at the 4-year return line.
Yeah. So if you look at the prior cycles, this just, again, speaks to the insane. I don't even know if it's insane. That kind of probably underplays it.
God, I wish I could have a time machine and go back and buy some of this.
So you have a Bitcoin price that has traded anywhere from, in 2012, that was the start date of the halving, from $13 to a peak of $1,100, almost $1,200.
Wow.
It peaked 370 days in. That was a return then of, at the top, almost 9,000%. The 4-year return, because we're just looking at when it went from halving start date to peak. 4-year return, you end up.
Your max drawdown was 83%, though?
That's the thing. Yeah, it looks like it's dead. And then it rises from the ashes.
Like a phoenix from the ashes.
This is just amazing, right? So 370 days tops out at 11,000 for one catalyst or the other. I think, there was obviously the Mt. Gox hack, right? So this thing has become more durable over time, if you think of it that way, because if it was going to die, it would have been a long time ago.
Yeah.
This whole markets blew up. So then we fast forward to 2016, ICO bubble. This thing tops out, about 20,000 or so. Down 84% afterwards.
Wow.
Go to 2020, COVID. You've got a price that goes from 9,000 now to 67,000. Hangs out there, pulls back, trades back up to 60, and then collapses by 77%. Your 4-year return ends up being 640%.
And how many days into this? How many days into after April?
We're not yet 360 in. We're, halving was, I believe it was April 20th, 2024.
Okay, so we've got about 6.
Not quite there, yeah.
We got about 6.
You average this out, you're around 500 days is where you've peaked before. Again, the past is not a predictor.
No, I mean, you have 3 samples here. So, but that's fascinating.
Here's what I think is fun. Next slide.
Okay, let's do it. Before
we wrap it up. This is my favorite one, because what do we have to look at here? Okay, the magnitude of returns has fallen by 74% on average each time. Like the cycles are perfect.
Yeah.
It's just weird.
That is crazy.
But down 74% each time. So if we take the prior halving and we reduce it in terms of the magnitude of the return by 74%, then what we might expect is a return of 178% this cycle. Now, on average, you do get 150% per
For
year.
sure, yes.
And so just to put some context around it, like where could it go? Maybe. Well, the halving date price was about 65,000. So 178% up from there gets you, well above 150.
178% return, but we expect to see a 77% drawdown at some point.
Possibly, absolutely. So like if you just need some sort of like framework or roadmap for when do I want to get out or how would I think about this, I don't necessarily think that we've seen the top. I mean, who knows? But if this plays out in any fashion that's similar to prior cycles, then you probably are looking at a $150,000 Bitcoin price, if not a little bit higher. ETH is just insane. That's on the next slide.
All right, give me the next slide. Sorry, we're running over, but I
one
want to see
more,
this.
and people will just think this is just dumb at this point. Here's ETH. It just hasn't been around that long. Same kind of cyclical behavior here.
And so I'm looking at the days too, and that was April 2024 as well.
Yes. Yep. So I'm just saying so there's no halving in Ethereum, but I'm just saying if we just use that as the starting point.
Is the starting point. Okay. I didn't think there was halving in Ethereum.
So here you go. Like, I don't know. Probably not. But people get caught up in the fact that this is a six-figure asset. But if I told you a $4 stock could go to 35, you wouldn't think that's all that insane.
No.
I'm just telling you that like what we've seen historically is that a $4,000 stock can go to $35,000 if it plays out this way.
If it plays out that way.
I mean, maybe it doesn't, but like I've seen some crazy stuff here.
This is fascinating.
So it's kind of fun, at least. At the very least, it's entertaining.
It's absolutely fascinating. And I want to say thank you for giving up an hour of your time. You've created, I'm now your number one fan. I'll be watching you every day. So I'll give you shout outs on there. But no, thank you. This was so interesting. And I'd love to have you back again.
Would love to be back.
Okay, because I wanted to talk through a little bit lower level stuff just because it was my first dip of toe in the water.
Anytime.
All right, I love it. Thank you so much, Ryan. Everybody out there, remember to, this is the camera, to trade small, trade often, laugh with us, learn with us, and watch the Liz and Jny Show. See you Monday, everybody.
At Tasty Live, we live and